Good morning, everyone. Welcome to our Tuesday morning room. Give me just a moment here. I'll get you my charts. All right, you should be able to see what I see. Okay, well, here we've got the NASDAQ on this monitor. What you're looking at, for those of you new to the room, welcome. We've got the diversified trading systems here. So we've got the Hawk Scalper in the top left, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor on the bottom right. On my other monitor, I'm also following the E-mini and crude oil. I might flip over the E-mini for soybeans, though. The E-mini has been kind of dragging a little bit last few days, or maybe I'll put the mini Dow back up. I haven't decided yet. All right, let's take a look at what's going on here in the NQ. And this is our Hawk. Not a whole lot. You can see all these yellow bars through here. The market's very undecided at the moment. You can see here on the Falcon, this is the overnight session, which was, I don't know if that's right. That doesn't seem possible. Yeah, that's right. The overnight in the NQ was pretty much non-existent. Okay, so, well, we're kind of sitting on our hands for a little bit here. I'm watching this first micro-macro cross. I hate signals that come right out of the gate. It's just that there's so much going on this early in the market that a lot of times, I don't want to look at a trade until the end of opening range. It does look like it would have hit the profit target. Yes, it did. And what if I had entered below here? Yeah, it looks like it'll do it too. This has been kind of par for the way this market's been trading the last few days. You can see this was yesterday's session. Look at how tight that was. But we've been spending a whole lot of time in scalp mode lately. This is technically a rule of three, where we've got 3 breaks against the band, 3 signals. However, I haven't seen a test of the extreme yet, so I would like to see a little bit of a bounce here. Show me that there's some buying going on, and then I think I'd be a little bit more comfortable selling. So here's that reaction now that we were looking for. On the hawk here, it's likely to develop into a macro pullback signal. The E-mini is still holding tough, just for the moment. Here's the E-mini. Still very stagnant. Is it even moving? Yeah, there it goes. I'm always leery when this happens, when the market is this slow. Look at how choppy our filter is, though, all over the map. I'm debating bracketing this actually with an OCO order. It's not something that I normally do with the E-mini, but it is a feasible trade. We know where the lows are. Could turn our OCO on, enter our sell order, enter our buy order. And just take the market whichever way it breaks. All right, here comes the E-mini now. On the Falcon that we were looking at, this is it's kind of an early trend change signal building. We've got the trend line changing color, We've had the down. Now normally we like to see it a little bit more, well, I can't even find you an example, a little bit more like this, where we see the push change the trend line color, then the sellers come back, then the buyers come back. This here would be a better trend change signal. This is what we call an early trend change signal because it's occurring just as the trend line is flipping over. I'm still playing that OCO order, bracketing this channel that we have. But it's the market's seriously lacking direction today. Today. It's been like this all week, hasn't it? All right, here comes the NQ again. Now it's working on a red bar buy signal. We are expecting a test of the extreme here, so we are expecting a little bit of a move higher. However, I think overall this market has changed trend. You see the Raptor is already, the band on the Raptor has already flipped over. Thanks, Jim. Jim says the advanced decline is pretty much even up, only about 200 to the good. So about, as far as the bias goes, there's slightly more buyers at the New York Stock Exchange than sellers. And here we are, quarter to the hour, my least favorite time to trade. It seems that if the market throws me a knuckleball, this is the time it's going to do it. We're getting a trend change signal here on the, or not a trend change signal, pardon me, a with trend signal on crude oil. And unfortunately, the ATR is not in sync. You see this signal here, not quite as desirable as this signal right here, where the ATR was already supporting prices. Now what I can do to take advantage of this, if I chose, is to enter above that ATR line, cover it down below there. And what that would do is that would bring the ATR in sync. Alternatively, I can look at a second push on this bar. So if this bar drifts good and low, then I can enter above the high of this bar. See if it's going to back off for me a little bit. What I want to see is I want to see some really active selling here, so that if it takes out the high, then we will see some momentum go along with it. All right, so now I've got some serious selling going on there. I can readjust my trade to go in above the high because the sellers have shown me that they're there. So I won't worry so much about the ATR line right now. And if this market pops above these highs or the high of this bar, then hopefully we're going to see a decent entry. Okay, here's the E-mini trade. We're still floundering. I'm still debating. I've still got this bracket order up. I'm not getting a warm, fuzzy feeling out of it, I have to admit. I would prefer to see a move lower, as I think a lot of people might, given the recent run-up in the stock market. Conflicting signals here in the hawk and the eagle giving us a buy signal, the hawk looking a little bit weaker. And thanks, Jim. James says the advanced decline is moving a little bit more bullish. We're about 350 to the good now. Okay, and our hawk has now drifted into yellow bars and might be giving us a green bar sell. Okay, crude oil starting to back off our buy in the eagle, so I'm going to scrub that trade. Here's the hawk for crude oil, and this is the problem. You can see where all these yellow bars, right? Just a bit of a mess. Wow, everybody's going sideways. Okay, so now we're getting a green bar sell in our NQ. And I know there's a yellow bar attached here, but with the red bar buy, green bar sell, so long as we have a one of the bars in color, it's okay. Now we're looking for a test of the extreme here. So I do expect it to go lower. However, you can also set this up to buy the failure. This is our counter trend signal. So it looks like we're going to get a good test of the extreme. We'll see whether or not it follows through. Oh yeah, there it goes. Good job. All right, so here we've had our test of the extreme now. On our eagle, we're starting to generate our sell signal. So this is actually now a rule of 4, but everything is more in sync now. So as with all our other counter trend signals, we can just treat this as an early warning. You don't need to take it right here. Although we can also take it on the other side of this ATR to bring everything into sync. Let's see, what if I risk it up there? Well, that's pretty good. I bet you I can even risk it above the high. Even better. Don't quite have a first micro macro cross here yet in the hawk. We are getting a first micro macro cross in crude, however. Let's bring that over here. So we've emerged out of this range. We are getting a first micro macro cross signal. The signal will print right here. 1, 2, 3. For 4 ticks, I can take it below the low and cover it up there. I might be a little bit more comfortable with that scenario right now, just because there is a possibility this could drift a little bit more and turn into a macro pullback. But taking it below the lows, oh, there we go. See, it's always the trade-off, right? If I had taken it here at the hash mark, I'm 4 ticks closer to my profit target. In fact, the low of this bar would be my profit objective. Oh, they're gonna. Oh, how nice. They played nice today. Okay, just making some notes in my journal. Oop, the advanced decline is evening up again, Jim says. All right, so here come the sellers now. The top of the hour. Oh, major news. Thanks, Dave Denton. No wonder the market was so sluggish before. There is a simple rule that I like to follow with with these sorts of things as well, that if I've had a winning trade in one direction, so for instance here out of the gate we had the first micro macro cross. No, I didn't take this one, but it was still a good trade. So it was a profitable trade to the downside. That tells me that the sellers are paying off on moves lower, so I should be looking for opportunities to sell. And of course, trading in hindsight's a lot easier, but rather than looking for the possible buy here off of the green bar sell, I should have sold it, because I did have a selling opportunity back here. Here was another selling opportunity. So I should have had a little bit more of a bearish bias on the day. Oh, nicely done, Dustin. Dustin's cleaning up 3 trades for 50 ticks, he says. The Raptor, the Falcon, and the Hawk, all on the NQ. Well done, Dustin. Well, they stuck their toe in the water. Nobody seems to like the temperature. So here we are with this green bar sell again. I could take it here. I could cover it, say, just above there. Kind of a little hit and run style trade. With these red bar buy, green bar sells, what you're looking to do is normally you're looking to enter early or as early as possible. In order to not make the market work so hard. Get down there now. Let's go. A couple more ticks. That's all we want. Come on. Good. Okay, good to know. Thanks, Jim. James says the 10 a.m. low on the NQ 44 or 44.31.50. 44.31.50. Oh, I think that's the low of this bar right here, isn't it? Pretty darn close. Back into this tug-of-war mode now between the buyers and sellers. We know where the buyers are digging in. It's right down here at 44.31, 44.31.50. The sellers have been active here around 44.36.37. And now we're watching the buyers give them a little bit of a push, and now we need the sellers to push back. Oops. I'm going back to my original stop just because I think this market needs a little bit of room. I don't want to get myself stopped out prematurely. This market has broken the lows, you see right here. That tells me I can expect at least two moves in the direction of the breakout. So here's move number one. I'm waiting on another leg lower. Whether it's going to be a big leg or little leg, I don't know yet, but the market does owe me one. Dustin says he's going live this week. He's a little nervous. It's, yeah, it's normal. That's why it's so important when you're trading in sim to try to make it as realistic as possible. If you do that, and if you can make money trading in sim, you will make money trading your real account. Now, you can never fully duplicate the emotions. You're going to be a lot more vested in your trades when you go live, obviously. And the blood's going to run a little hotter. The palms are going to get a little sweatier. Do your best to stay calm and never risk an amount that you are uncomfortable with. You know, it's all baby steps. Start small. I'm sure you'll do fine, though. Yeah, okay. James is having a little bit of a problem here. I'm going to demonstrate it for you. He's saying it's very difficult to move the buy and sell limits. The mouse moves it very fast. And what happens, if I'm understanding Jim's question correctly, sometimes when you're at the edge of your chart, you see there's nothing above the chart here except my order. If I grab this now and I move it, you see how crazy, whoa, how crazy the chart gets? To prevent that, grab the y-axis of your chart, click on it, and pull. And you're going to see a little F turn up in the top corner. And what that does is it freezes your chart so that you can roll your stops or your profit orders wherever you want them to be. This is your auto format button. So once you click this, it automatically resizes your chart. So if that's the problem, Jim, that's what you need to do. Just grab the chart here, pull it ever so slightly, and that will lock everything up so that you can make your changes. Now, if I misunderstood your question, you'll have to tell me again, please. I have a feeling Jim's a bit of a character. He says money is your only self-worth, or based on your self-worth. He's joking, of course. Yes, that's the other thing, Dustin and everyone else. If you're still trading in Sim and when you go live, you will take losing trades, right? This is a difficult business. Sometimes we make it look easy, but it is a tough business. There's no question. Don't beat yourself up for taking a losing trade. Keep a trading journal. Mark down why you took the trade. Try to have at least 2 reasons for taking a trade. And if you lost money on a trade, try to figure out what went wrong. What didn't you see? Sometimes it's very obvious. Sometimes you're trying to buy into a downtrend or sell into an uptrend. Jim's given me the play-by-play here. He says the banking indexes are getting a little stronger, but the DAX is getting a little bit toppy. The DAX, of course, is one of the world's fastest markets. It's the European stock exchange. And I don't know if it's really a leader. Sometimes it does seem to lead. the North American markets. Sometimes it seems they get the news first. And I think all the action is going on in Europe right now anyhow, with Greece and the European Union. So it makes sense that maybe the DAX would move first and then the stock market would follow. Yeah, Jim says the Germans love the NQ. What's not to love? The NQ is a great market. Really, dollar for dollar, I think the NQ is a pretty tough market to beat. Normally you get great ranges. $5 a tick, it allows even the smallest account trader to participate. Okay, back to this 44.3150 area. We need to see them trade below there, take out a few of the buyers, and then I think we might be in better shape. We'll see a run at the 44.26 line. So this is my second leg lower now. This is leg number one. We're working on leg number two. Let's see how low they can get. Not doing a good job of it so far. Here's a red bar buy, all building in the same area. This red bar buy is a buy signal, but it is also our counter trend signal. So we could set up to take it below the low of this formation. Could even take it below the low of this bar here if we wanted. Cover it. Our trade would look something like that. Very significant area. We know there's been active buying here. There's obviously a little bit of buying going on here. There's some selling here, but stronger selling here and here. Okay, so here was the push up from the red bar buy. Let's see, would it have hit our profit objective? No, not quite. We're getting the test of the extreme now, right? That's the now once we see this test of the extreme, we should be in better shape to sell. Similar look here on the E-mini. This is the hawk on the E-mini, also with a red bar buy. Also with an opportunity to sell the failure. Okay, so we're right back to where we started. Yeah, here comes the NQ now. Here come the buyers. Give me one more push lower. Come on. Dustin says he's worried about his losing days. It seems that what he says, when I have a losing day, it's a doozy. Yeah, that could be a problem. I've got to stay out of those ranges, but don't always recognize the range until I'm in a trade. Yeah, it's like I said, the best thing is to start small. And sometimes you need to run a bigger stop just to give yourself a little bit more of a chance. Like right now, this is problematic for us. It does look as though the NQ, at the very least, has maybe entered another ranging phase, in which case we might get chopped about a little bit. But by having this enormous stop, I've given myself a decent chance to maybe not realize a profit, but maybe if this market heads lower again, I can manage the trade to minimize my risk, or maybe even get it down to break even. Had I run my tighter stop, I would have already been stopped out. And things are not looking all that promising at the moment. Yeah, James just wrote the advanced decline's getting a little bit more lopsided. It's about 450 to the positive now, so that's showing some buying pressure. Yeah, Jim says everybody's posting new highs except the NQ. All right, sellers, if you're there, this is where you got to make your stand or it's game over. Things were looking bad for us as soon as they broke this trend line. However, it was something like this. But we're not done yet. Oh, come on. Yeah. Oh, I see. I got a question here from Peter that I missed. Hold on, Peter. Oh, this is a very interesting observation from Peter. Peter says, you're right, trade the NQ with one contract, add a contract every month. Nothing like having skin in the game. for trading experience. Peter says that in his experience, he played one contract on the NQ with a large stop loss. Then I go out and play golf. Pete, you're my kind of guy. He says, when I come back, I've made more money than being close to the action, which is so true. You know, a lot of times, for me personally, there's only one thing worse than a losing trade, and that's being right about the trade but getting stopped out too early. Pete says, Eric, quick question. Do you average in? Sometimes. A lot of times I'll just take my full position up front. So for instance here, if I took this red bar buy, I've already got my risk dialed down to 1%. So I would probably just go in and set it up like this. 3 contracts, $225. If I can stomach that, then I'll just take the full position. If, however, I'm thinking this market is really bizarre, what I'll do is I'll flip over here to manual mode. I'll take my one trade, manual mode, and I'm going to turn my targets off. So I'm going to throw a 0 in here. And then what I'll do is I'll just play a runner. So I know I can afford approximately 3 contracts. Excuse me. And so I'll take the trade, and then the market moves higher. I'll probably add another position on a breakout up here. And by this time, obviously, my stops are rolling, so I have less in play. And I probably would prepare to add a third position right there. And I would have been stopped out here on the 2, so it would have turned out to be a nice little trade. But that's how I tend to average in. I know different people do it differently. Some people like to average in quickly. And there's a certain amount of logic to that. If there was a trader many, many years ago, well, an eternity on the internet, he called himself Phantom of the Pits, and he had 2 rules. Rule number 1 was, he actually had a few more rules, but the 2 most important rules were always make the market prove you right. And that had a big influence on my particular trading style. To me, what that meant was you want to get in with momentum. So people often ask me, Eric, why don't you use limit orders? People who use limit orders tend to do things like this, like they'll shoot a trend line across the bottom here. And then if the market starts to come down to this trend line, they're going to throw a limit order to buy somewhere around here. Now, there's nothing wrong with it, but to me, this does not prove the market, or this is not the market proving me right. It's me guessing what the market will do next. So I would have bought in, probably, the nice thing about this particular strategy of using a limit order is you can usually run a tighter stop. In fact, sometimes these types of traders run insanely tight stops. They'll throw a few stops or a few ticks, they'll throw their stop in a few ticks below the trend line. Now, that can be problematic if the market goes a little bit lower. If you leave yourself a reasonable stop, then it's not so bad, because there is a chance that the market will reverse and go the other direction. But you can see in this particular instance, there was no savings to be had. If I bought in at a limit, or if I waited for my signal, I'm buying in at the same level. But the difference is I'm going to make the market prove me right. I'm not going to get in until the market actually trades above my entry price. So that was rule number one that the Phantom had, and that's how I interpreted it. Rule number two that he had is always press a winner. Now this guy was a floor trader, so he would be pressing trades, seconds after it started moving in his direction. He would never be in a trade as long as we were in a trade. We're in trades for 5 to 20 minutes or longer. That would be an eternity to a floor trader. In fact, I knew a fellow, Scott Berry, who traded the meat and grain pits, and a lot of the floor traders thought they called him a position trader because he would stay in a trade for all of 5 minutes. So you can see everything is relative. So what the Phantom said was he would press a trade, always press a winner. That was rule number two for him. So some people like to press the trade early. So you see this little bar here with this little wick on it, or this little tail, I should say. He might have considered that a good reason to press this trade. This would look to him like a swing, right? On a shorter, if you dial this down to a short enough time frame, it's going to look the same as this does here. So while I'm postponing my entry above this larger swing, on a shorter time frame, we have the exact same thing going on. And he might say, well, that little wick right there is enough reason to press this trade. So he might throw in his second order right here. And then it goes up, and you see now we have a wick on this bar. That would be reason for him to press the trade again on a break above that. See another bar with a tail. So he would already be in with his 3, whereas I would have, refrained a little bit and perhaps only entered above there. At the end of the day, there is no right or wrong in this business. Well, I know you're going to say, yes, Eric, there is a right or wrong. You make a profit or you make a loss. But the way you execute your trades, I suppose it always boils down to what you're comfortable with. And there's nothing wrong with pressing your comfort zone. But, when you're starting out, I think it's very important that you stay within your comfort area, that you start off small, get a feel for it, and then, as Peter suggested, maybe 1 month just trade singles, and then the next month add a position as you start to get more comfortable seeing these numbers roll by. And hopefully more of them will have plus signs associated with them than minus signs, until you're at a position where you're trading your optimal size. When I first started trading, I was so anxious to get into trading. I thought the opportunities are going to disappear. They don't. I've been involved in trading for 20 years now, and the opportunities only increase. So don't ever be afraid that you're going to miss out on an opportunity if you don't start trading real money right now. The only opportunity you might miss out on is a future opportunity because you've blown up your account. Dustin asks, when you're trading live, how selective are you? I try to be as selective as possible, Dustin. I try to hold out for things that appear to be higher probability, like this red bar buy. I know there's going to be a test of the extreme. The market was in a downtrend, which is why I chose to set up to sell it. Had the market gone up, tested the extreme, and fallen off, this would have been a very high probability trade. First micro macro crosses on my hawk. This one scared me off because it was, 2 minutes into the session with a very, very quiet overnight. Made me a little hesitant. A lot of yellow bars through here. But you're right. You don't want to be so selective that you miss opportunities. Oftentimes, if you're not taking the opportunity when it presents itself, you just have to be prepared to walk away from it. Like this first micro macro cross signal that I missed. The market made a substantial move lower, right? That was a big move lower for the NQ right out of the gate. I recognized that I missed that move, and then I was sitting on my hands and waiting for for another probable move to come along. Another high probability move, or signal, I should say. But now, that we're all sideways again. We've got all these yellow bars. Our filter is breaking up. It's going to be true for our other tools also. There's, it doesn't cost you to wait. Yes, I know there's the opportunity cost, but the opportunity cost really isn't a cost. Taking a $200 hit, that's a cost. And again, this is where the journal comes in. If you find yourself passing on too many opportunities and taking losers, why? Try to isolate. Why? Why am I doing that? Oh, well, very nice comment here from Peter. Informative and complimentary. Peter says, Eric, I played for 4 months, adding a contract every month. I had 23 days of positive returns with no losses. That is fantastic, Peter. But some days I only made $20, but you were still making money. And I'm going to touch on a little strategy here in a moment. Now I trade 10 contracts, but I was thinking of doing 2x5 trades. Well, Peter, that's not a bad idea. Certainly, I'm of the opinion that less is more. The less we make the market perform, the better off we are. I know some people who just like to scalp. We have a $50 target for our trades. And normally, let's say in a $10 market, that would be 5 ticks. I know a lot of people who like to scalp for 3 because 3 ticks are easier to get than 5. So, doing 5 trades, doing 2 trades instead of, we're doing fewer trades versus more trades is usually better. Peter says, just hearing from your experience is worth buying the DTS burrs. Well, that's very nice. Thanks, Peter. He says, I don't have the Raptor, but I'm looking into buying it. I like the one screen idea. I think that's a big feature for the Raptor. I also use your S&R lines. Those have been some of my best trades. I'm very proud of the support and resistance lines. These took me a very long time to develop. And yeah, sometimes they still surprise me how well they'll pick out a support or a resistance area. Mike is asking, after hours, do we use the same tick size for the NQ as during regular hours? Yes. This was very unusual, Micah, that we would have a session like this after hours, that it was this dead. That's very rare. If the NQ is trading that way, you can always flip over to a market like gold, which tends to perform pretty well around the clock. Dustin is asking, do the support and resistance lines affect how you take a trade or not? Well, I like them a lot as a confirmation tool. Like we see, we've got the trend change signal now. It's being supported by the primary support. I know that Omar always liked using them as profit objectives. And I know some people, especially on a time chart, will simply trade the breakouts. So if this were a time chart, it's not obviously, but if this were a time chart and it closed above the primary support line, people would buy. I know some people who trade it that way. I think you need to, if you're going to do it like that, you also need to have a directional bias, like a moving average or something. Otherwise, you're going to be buying on a break here and you're going to be selling on a break here. Obviously, the one works better than the other. The important thing with tools, though, is that they enhance your trading. And what I mean by that is you can throw so much stuff on your charts that you can't make a decision anymore, that you can't hardly see straight for all the stuff that's on there. And that's not what you want. You want to be able to look at your chart. You want to be able to make a quick decision, an informed decision, a confident decision. Yep, Micah says, so the brick size is 6 ticks day or night? Yes, sir, it is. We also have 8 ticks are the default for the Falcon, 12 ticks default for the Eagle, 8 ticks default for the Raptor. The only time I will change that is in a situation like this. If we start to experience, and this happens occasionally, not very often, and it usually happens to the eagle. If I see a lot of session breaks come like this, like let's say the day ends like this, and I have another session break over here, I've got 3 or 4 days that are very, very small. That tells me that the brick size is going to be a little bit too large for the current market conditions. In which case I will probably dial down the eagle from 12 ticks to 10. And that will loosen things up a little bit. But for the most part, we're not so interested in generating more signals, right? The more signals you generate, the more likely you are to take a losing trade. I think a lot of traders have this problem because, well, let's face it, we all come from the brick and mortar world, right? Where the more you work, the more you do, the more money you earn. And yet in trading, that trading is funny because it can actually have the inverse effect, where the more you trade, the less you earn, because now all of a sudden you're taking losing trades. Better for you to take a high probability signal. And I'll go back to this first micro-macro cross. Better to take a high probability signal, trade it with size. So dial in your 2%. 2% should be an amount you can afford. Oops, turn on my targets. Go, boom, 250 bucks, thank you very much, and call it a day. You know, better you do that than try to scalp in and out for, for 50 bucks. Okay, I got 50 bucks, great. Okay, now you wait for another signal. Okay, I got another $50. Great. Here's another signal. Uh-oh, I just lost $100. So I'm up $100 now, I just lost $100. By trading more, you invite this type of possibility. And this is what most traders do. But it's a better strategy, in my opinion, to try to, just bite the bullet, go in with a high probability signal. There's no guarantee, of course, that this trade will work. And if it reverses and I lose 500 bucks or 475, yeah, that's a stinger, to be sure. But that's why I only commit to a high quality signal. And remember, this is an amount that I can afford to lose. Unpleasant, yes, very. But if I nail this trade, great. I'm up 250. Let's say I have an objective. Oh yes, this is going to bring me to the second point I was going to make. Let's say here's my second signal. Where are you? My green bar sell. And I go in and I do this sort of thing. And I come down and boom. So 500 bucks, I'm done. My day is done. That is the ideal way to trade. Now, I wrote about this before, but quite simply, I'm a big proponent of having a trading quota, but having a positive result. So let's say you set yourself a trading quota of, well, we'll say 3 trades a day. I would advise 2, but let's say 3. And starting out, I might even advise 1. but let me go through the process and you can decide for yourself what works for you. So let's say you have a trading quota of 3 trades a day and you want to end with a positive result. Those are your 2 requirements. So you take trade number 1. Hooray, it works out. You made, let's say you made $100 on it. You take trade number 2, you made $100 on it. You take trade number 3, and let's say you lose $300 on this one. So you're up 200, you lose 300 on the next one. You've taken your 3 trades, but you have a negative result. You're $100 in the hole. So let's say you take trade number 4. It works out. You've made $100. You've now had your 3 trades, but you still don't have a positive result. You're still at 0. So you owe yourself 1 more trade. And let's say you take this trade here, and it works out, and you make another $100. Your day is done. You've taken 5 trades. You now have a positive result. Your day is done. That is one way you can avoid blowing yourself up. Now, yes, you might look at this day in hindsight and say, oh, wow, you know, I should have done this. Oh, I should have taken this trade. Look how high it went and so on. Forget it. You can't do that. This will also teach you to be a little bit more selective. If going in, I know I'm only going to take 2 trades today, well, that makes me a whole lot more selective about which 2 trades I'm going to take, doesn't it? If I know I'm only going to take 3 trades today, that will make me a whole lot more selective about which trades I want to take. So I think it's a good idea to have a quota on your trading. That is an easy way to avoid overtrading. And, you know, you have those days like Dustin says, when he has those losing days, they're doozies. I can almost guarantee you, Dustin, that those losing days you were overtrading. I bet if you take a look at the number of trades you took relative to your winning days, I bet you probably took more trades. So let's say your average day is 4 trades. I bet you your losing day, you probably took 6, 7, 8, 10 trades. Because those little losers, they have a way of adding up. Michael's saying, my Raptor came with a brick size of 5. Could that increase a losing trade? No, not necessarily. I'm going to show you because Mike is asking, how do you change your brick sizes? Your brick sizes, you want to go to your data series tab. You can also do your data series by right-clicking on your chart and going to data series. This is where your tool is going to determine the brick size. So let's take a look at 5 ticks. The NinjaTrader will default to 5 ticks when you go to the mean Renko setting. And I'm not going to touch it because I'm going to break it. What I should have done is minimize this screen, but here we go. Okay, so here's 5 ticks. And you can see you're generating a few more signals because the brick size, of course, is a little bit smaller. You're going to generate signals a little bit more frequently. But we normally, for the Raptor, for most of the tools, we recommend an 8-tick brick. Now, I know there's some people that experiment with it, and there's nothing wrong with that. That's one of the features of the Raptor, is it has a little bit more tweakability, for lack of a better term. Okay, we're still sweating this NQ trade. I'm still looking for my second push lower, my second leg to the downside, which is why I've been hesitant to take advantage of this macro cross, or sorry, macro pullback, even though I think it did get up to our profit target. Yes, it did. So a little bit of an opportunity for a scalp in there. Dustin's watching, or James is watching the dome. He says there's a lot of sell contracts at 44, 45, 50. So we just tagged that. Let's see if the sellers don't beat up on the buyers now. Dustin is asking, I see a lot of my Dustin says, I'm noticing several trades are going to run 4 to 7% risk of my live account. Is that something I can get away with? Yes, but not for very long. Obviously, you're better off risking 4%. I would avoid risking 7%, even if it means missing a trade, even if it means missing a good trade. Your trading capital is your stock in trade. You know, if you were a retail store and you were selling hammers, well, if you have no hammers to sell, you're out of business. Your trading capital is what you have to buy and sell. The problem is statistically, you could take 10 losing trades in a row. If you're risking 7% of your account, you're going to blow 60 to 70% of your capital. And that's probably insurmountable in the sense that you've just blown up your account and now you can no longer trade. So no, capital preservation is key, even if it means, like I said, missing on a good opportunity. Well, they've slowed somewhat since their earlier rally. They're taking a long time to put stuff together, but that seems to be the way the markets have been the last few days. Aha, see, there you go. Dustin says, I've noticed one thing that contributes to my losing days. I have a habit to try and get out in front of a trade if I don't get my orders in on time. It seems it never fails that I miss my target by a tick or two and then it reverses. Well, you see right there, you've already identified something that you should not be doing. Don't do that. Or if you do end up doing that, take a tighter profit. Grab that money earlier. You don't want to end up working for your broker. That's the other thing too. You know, your broker loves to see you place a dozen orders a day. He loves it. Loves it. It's not necessarily good for you, though. Oh, you scoundrels. Well, things are not looking too good for my NQ trade right now. I thought for sure the sellers would knock them down there. Now they're going to make a push at the high. Stinkers. Well, maybe I should have taken the loss earlier. It would have opened me up to a couple of buying opportunities. I've been a little bit stubborn about holding on to my short. I find it difficult to believe, though, that this was my second leg lower right here. That's a pretty tiny push lower. Well, there they go. And that sucks. Oh well, that's trading. Can't say we didn't give it a chance. Oh wow. Dustin's 5 for 5 and up 70 ticks. Maybe you should be running the room. Nicely done, Dustin. Well done. Good job. All right, you guys, we're going to button up the room here in a moment. If you have any questions, please type away. A reminder, tomorrow is the open house, the public room. I'm going to run it a little bit differently. We're going to run it more like our regular trading room. I'm not going to spend as much time focusing on the tools themselves. All right, no more questions. All right, I will see you guys again tomorrow. We'll talk to you later. Bye for now.